Okay, good afternoon. Welcome to today's webinar on excess fund balances. My name is Amy Hoppola, and I am the Financial Manager overseeing the Fiscal Monitoring Unit in the Office of Health and Nutrition Services for school nutrition programs. One of my responsibilities is to provide oversight for resource management reviews in all fiscal monitoring related areas. Also with me today is Brenda Sweatman, our financial analyst that manages excess fund balances, equipment requests, the Equipment Assistance Grant, the School Lunch Year-End Report, and the FID School Meals Report. Brenda will be co-presenting with me today. Before we dive into this presentation, let's review some housekeeping tasks. All participants are muted. You may type in questions at any time in the conversation box in the lower left-hand corner of your screen. Look for the circle with the I am message box at the bottom of your screen and click on the circle. This opens up your conversation box. Questions will be answered at the end of this webinar. The four objectives of this webinar are to discuss the rules of excess fund balances, go over common allowable ways to spend down excess funds, demonstrate how to submit a spend down plan of action to MDE, and lastly, how to request a carryover extension. MDE is required by USDA regulation to assess net cash resources. Net cash resources refers to the food service program's current fund balance. This requires monitoring by the School Food Authority, or SFA, and a proactive approach. Because this is a nonprofit school food service account, SFAs are required to limit their fund balance and invest the proceeds or profit back into the program. This means that the profit must be spent on program improvement. The regulations require that ideally an SFA never triggers an excess fund balance. Spend down plan of actions are required by MDE if an SFA's net cash resources exceeds their allowable fund balance at year end. MDE sends notifications around January or February each year for the previously closed out school year. In fact, notifications just went out February 3rd for all SFAs with an excess fund balance from school year 18-19. It is a quick turnaround from the time our office sends out the notifications because we do expect that SFAs are already aware of their excess fund balance and have started to plan. SFAs should know if they have an excess fund balance from closing their financials for the school year. They should be alerted through their single audit, in addition to reviewing their school meals report or school lunch year-end report in late fall. SFAs are required to fill out the online plan of action form in GEMS Mars, along with uploading any supporting documents for review and approval. The excess funds must be spent by June 30th of the current year. MDE will allow a 1-year carryover extension to spend the funds into the following school year, but the SFA's plan of action must be approved prior to requesting the carryover extension. The SFA's carryover extension request must be submitted through the GEMS Mars application for excess fund balances. Once an SFA submits a plan of action into GEMS Mars, the SFA will receive MDE's letter of approval in the form of an email from GEMS Mars to the superintendent, business manager, and food service director. The USDA requires that SFAs have a process in place to monitor their net cash resources and should be proactive at investing the proceeds back into the program to keep their fund balances within allowable limits. Again, ideally never triggering an excess fund balance. SFAs can submit equipment requests or other capital outlay requests to avoid incurring an excess fund balance. They also can be submitted prior to waiting for MDE to send initial notification requiring a spend down plan for SFAs with an excess fund balance. The equipment or other capital outlay requests are needed to back up the spend down plan eventually anyway. During resource management reviews, we will be checking the prior 3 to 5 school years, and any SFAs with excess fund balances will be issued a finding and has the potential for further findings if they failed to submit a required spend down plan, failed to execute an approved spend down plan, or failed to obtain MDE's prior approval for equipment or other capital outlay requests. It is important to note that having an approved excess fund balance plan of action does not mean that you have an approved equipment or capital outlay request. Failure to receive prior approval of an equipment request could result in unallowable costs requiring the general fund to restore the nonprofit school food service account for those purchases. Also, it is very important for SFAs to know that the USDA does require that federal reimbursements be reduced for SFAs that do not maintain an allowable fund balance. This is not something our office enforces currently. However, we are setting the stage to pursue further fiscal action for repeat excess fund balance findings going forward. The excess fund balance calculation chart provides an explanation and examples of how to determine if an SFA has an excess fund balance. Use the following method to calculate the average monthly operating expenses. Divide the total annual expenditures without capital outlay by 9. 9 is the number of full operating months in a school year. To calculate the allowable fund balance, multiply the average monthly operating expenses by 3 to calculate 3 months average expenses. In this example, the total expenditure for the school year is $1.2 million. Divided by 9 full operating months, that equals $133,033 average monthly operating expenses. The average monthly operating expenses was then multiplied by 3 to determine an allowable fund balance of $400,000. Next, determine if the SFA has an excess fund balance by comparing the ending fund balance to the 3 months average expenditures, or allowable fund balance. SFAs must submit a plan of action in the GEMSMAR system if an excess fund balance is present. In this example, the ending fund balance is $500,000 less the allowable fund balance of $400,000. In this example, there is an excess fund balance of $100,000, and the SFA is required to submit a plan of action in GEMSMARS. This is an example of the summary section of the FID School Meals Report. First, you will see the fund balance information. You have your beginning fund balance, which is carried forward from the prior school year, plus current year revenue from the revenue section of the FID School Meals Report, minus the expenditures, which bring you to the ending fund balance for the year. Below that is the allowable fund balance, which is equal to 3 months average expenditures. Again, to calculate that, we take the total school meals program costs for the year, not including capital outlay, divide it by 9 full operating months, and then multiply that by 3 months. Below the allowable fund balance is the calculation of the excess fund balance, which is the ending fund balance, minus the allowable fund balance. In this case, the district has an excess fund balance of roughly $112,000. We also recently worked to include the same allowable fund balance information in the school lunch year-end report for our non-public school or private school sponsors. So, you have an excess fund balance. What can you spend it on? Equipment is the most common way to spend down excess fund balances, as it typically involves higher priced items. Per the uniform guidance, prior written approval is required for equipment or capital expenditures with a per unit cost over $5,000, or the SFA's capitalization policy, whichever is more restrictive. There is a USDA pre-approved list of equipment that lists items which do not require approval for. However, items on the list that reach a cumulative total of $25,000 per year per building must still be approved prior to incurring the costs. The equipment request form can be found on our website and should be sent via email to mde-fiscal@michigan.gov. You then will receive an email notification via GEMS Mars approving the purchase or asking you for more information. In order to submit an equipment request, you should have already bid out the items using proper procurement methods. MDE's Admin Policy Number 13 from school year 15-16 on equipment or other capital outlay purchases provides the USDA pre-approved list of equipment purchases. The equipment or other capital outlay request fillable form is also embedded in the memo. As I just mentioned, if you are on a spend down plan, you will also need to complete and submit an equipment or other capital outlay request form for approval as well. Failure to obtain MDE's prior approval results in an unallowable cost, which requires the SFA to reimburse the nonprofit school food service account with general funds or other non-federal funds. We are setting the stage to pursue further fiscal action for repeat findings in this area as well. Here are some other allowable and appropriate ways to invest the proceeds back into improving the food service program. Focus on food quality by increasing offerings and variety of fresh fruits and vegetables. Incorporate higher quality meats and cheeses into entrees. Focus on improving the atmosphere of the cafeteria and refreshing the serving lines. Keep in mind that the cost for updating or renovating cafeteria space, which is also utilized by other programs, will have to be shared with those programs as well. Food service cannot pay 100% for the updates unless it is exclusively used by food service. Invest in breakfast program. Add breakfast carts or additional points of service to serve more breakfast meals. Hire additional staff to help with an increase in breakfast sales and or support breakfast in the classroom. Offer a second chance breakfast. Add hours to an existing staff person or hire additional staff. Offer hot breakfast items. Purchase cooler bags and or carts for breakfast in the classroom. Improve breakfast in the classroom with things like color-coded coolers for efficient service or rolling coolers for easy transport. Refreshing smallwares is another good and allowable use of fund balances. Updating serving pans, utensils, displayware, etc. is needed periodically to help keep the focus on displaying quality fresh food to students and staff. Purchasing reusable bento boxes for a trendy new way to serve meals or other meal packaging items to better showcase high quality fresh food offerings. Here are some other common allowable ways to invest the proceeds back into improving the food service program. We did already mention updating or getting new kitchen and or serving line equipment.
Yeah.
Cafeteria or kitchen renovations are very common and probably what we see the most of. However, keep in mind again that the cost for updating or renovating cafeteria space, which is also utilized by other programs, will have to be shared proportionately with those programs as well. Food service cannot pay 100% unless it is exclusively used for food service. If you're not already aware, there is the option to eliminate the reduced meal price for breakfast and or lunch service. It is allowable to absorb the price of the reduced meal in the nonprofit school food service account. Those students would still be claimed at their reduced eligible status, but would not be required to pay the 40 cents per meal for lunch or the 30 cents per meal for breakfast. This is a goodwill gesture for low-income families in your community and reduces the burden of trying to collect on negative balances for those students. While it likely does not add up to a large dollar amount, it can annually assist to keep fund balances lower for districts that typically have higher fund balances. Adding staff or increasing wages for staff, provided they are predetermined and set up appropriately by the district, are other allowable ways to reinvest back in your program. This is, of course, if the decisions are sustainable to your program.
All right, see you later.
Updating point of sale systems are other allowable ways to spend down excess fund balances. That includes new hardware and new POS software, also adding more point of sale locations or alternative POS types like kiosks or tablets are allowable. This helps to improve speed of service, could increase sales, and could result in needing additional staffing to help spend down those funds. Of course, now what we've discussed today isn't an all-encompassing list on what would be allowable ways to spend down those excess fund balances. They're just some of the most common that we see. If you have any questions regarding other things that would be allowable, feel free to contact us anytime. We're happy to help work through the allowability of items with you for your spend down plan of action. And I will now turn the presentation over to Brenda to cover how to submit a spend down plan of action and carryover extension requests.
Get out. Anywhere in the text itself. You may need to submit an authorization form again if you receive the prompt that you do not have access. You can also reach out to the GEMS Mars support team if you think you should have access but don't. And they can be reached at mde-gems, Gems, at michigan.gov. When you reach the Submit Document page, click on the search button, then click on the blue link that is called Plan of Action 2020. Click the blue link. Again, if you click the link and nothing happens, then it likely means that you have a pop-up blocker that is stopping the window from opening. So you will need to disable your pop-up blocker, and you will be able to continue. Once you're in the form, fill out the various fields. If the fields are grayed out, that means they are read-only and you do not have to do anything there. Make sure you fill out all the required fields. This year we added a carryover line to the plan of action form. The carryover balance is defined as the portion of the excess fund balance that was unspent from the prior school year. So this year, for example, that will be from the school year 17-18. When you are completely done filling out the form, then you click Save and Close. In order to submit this to MDE, you must click the Submit in the bottom right-hand corner. And you can find this at the bottom of the page. Oftentimes, you may need to scroll down to see the Submit button. Again, if you need assistance at any point, you can reach out to the GEMS Mars team at mde-gems@michigan.gov, or you can phone them at 517-241-6270. Requesting a carryover balance. Carryover balance is defined as that portion of excess funds that is unspent as of June 30th. A carryover request must be submitted to MDE in writing if an SFA determines they will not spend the excess fund balance by June 30. The request should include the date the SFA anticipate implementing the plan and the date the SFA plans to resolve its excess fund balance. The request should be submitted prior to June 30th. We need time to process and to allow for the approval of the carryover balance prior to the June 30th deadline. Here are the applicable guidance memos and correspondent regulations related to excess fund balance and equipment requests. Administrative memo number 5, school year 17-18, covers physical requirements for operating a school meals program. Administrative memo number 13, from school year 15-16, covers compliance requirements for equipment request. In addition, the NSLP Resource Management Net Cash Resource Regulations are found at 7 CAFR 210.14b, along with monitoring requirements of net cash resources can be found at 7 CAFR 210.19a1. If you have any questions about excess fund balance or any other physical monitoring area, please contact our team and the physical monitoring unit by phone or email as displayed. And as a reminder, our physical resources are available on our website as well. We will now open the webinar for questions. Please type your questions in the box in the lower left-hand corner of your screen. After question, we will take a few minutes to review the questions before replying.
Okay, we're back with you. It looks like we have a few questions pouring in. Feel free to send more our way. I will start answering them in the order that they received, and we look forward to more to come too. So first question is, will we be emailing the presentation to us? And yes, we can certainly email out this presentation to everybody who signed up for the call today. And then after that, of course, we're always available for questions. If for some reason something was covered in our speaker notes that wasn't covered on the slide, or you have any questions, feel free to reach out to us. But we will make it a note to send out the presentation after we conclude the call today. Next question, would replacing cafeteria tables be an item that is normally approved? And yes, actually, for the most part, cafeteria tables are, for one, yes, they are allowable, and they would be approved on a spend down plan of action. Something important to note, though, that is probably helpful for the field is that typically cafeteria tables and chairs have a per unit cost of less than $5,000 a piece. So that means they technically do not count as a piece of equipment. So you do not need our prior approval on an equipment request for cafeteria tables or chairs. The only thing I have to add about that is it is an area that we see that folks need to remember that it has to be a shared cost. If the cafeteria is a shared space and any other programs use that cafeteria, like say for after school functions or for testing during the school day or athletics, whatever the case may be, if the cafeteria is not exclusively used by food service cannot pay 100% of the cost. So just something to keep in mind is that is expected to be a shared cost if other programs will use those cafeteria tables and chairs, okay? Next question on the list is obtaining a food truck for summer feeding and driving participation an allowable spend down option? And absolutely, yes, that is an allowable cost and something we are seeing a lot more often these days. Kind of innovative new ways to capture more meals in different avenues. So yes, food trucks are an allowable cost. That would be something that you could put on your spend down plan of action. And you also would have to submit an equipment or other capital outlay request on that as well. Keep in mind that food trucks would be something that would likely need to be formally procured. So you would go out to bid for that item first before submitting an equipment request form, and then submit it for prior approval before you carry out the remainder of that purchase. So again, the prior approval piece of it means that you've gone out to bid and selected a vendor, but before you carry out the remainder of that purchase, you have to get prior written approval from MDE. Once you have it, then you complete the remainder of that purchase and can pay for that item. Okay. And then it looks like the next question we have is renovating elementary kitchens to be self-operated instead of having to ship in food, an allowable spend down option. And the answer to that question is yes, provided the renovations to a kitchen and cafeteria stay within the existing square footage and footprint of the combination of the kitchen and the cafeteria space. So what the USDA regulations say is that food service is not allowed to pay for any infrastructure costs. So as long as those renovations stick to the existing footprint or square footage, food service can pay for those expenses in that regard. It would require prior written approval for a capital outlay project and what have you. But yes, it is an allowable option. Okay. And then the next question we have is, can you confirm how long a carryover request is good for? So that's a great question. Technically, what the USDA requires is we are only allowed to approve a carryover extension into the following school year. So for instance, school year 18-19 excess fund balances, which is what we are currently processing spend down plans on right now, are required to be spent by June 30th of 2020. Before June 30th of 2020, if you are not able to spend down those funds in full, you can submit a request for a carryover extension. That will then give you till June 30th of 2021 to spend down those funds. But we are not supposed to extend that carryover extension beyond that additional year. So it's supposed to be just one additional school year beyond what you typically would be required. Okay, so hopefully that answers that question. It looks like so far we have all of the questions answered. Please feel free to send more in, and I will put the line on mute just for a minute so that we can wait for more questions to come in and formulate answers to help you out. Okay, thank you. We'll be right back with you. Okay, I'm back at it for you guys. We have a few more questions that have poured in that I want to answer for you. The next one is, if I have an electrical issue with the socket I plug my warming tray into, would the electrical repair be an allowable cost? And the answer to that is yes. This area can be a little bit tricky, but provided the electrical is exclusive to food service use, and for a specific piece of food service equipment, yes, that would be an allowable cost. We have to be careful in this area, however, because the USDA regulations are clear that infrastructure costs are not an allowable use of the nonprofit school food service account funds. So in those things, we just have to make sure that they're necessary to food service and for exclusive food service use. So let's say, for instance, you needed to install upgraded electrical to operate ovens or steamers or other pieces of a kitchen equipment. That would be an allowable cost. So I think the general rule of thumb for everybody to think through is, if you ever are in doubt, reach out to us. We're happy to help, and especially we want to help proactively as much as possible, because the implications of getting something wrong and if you inadvertently charge something that is unallowable, we would have to require that the general fund reimburse the food service fund, and that's not fun for anybody, and we don't want to enter that territory. So we're happy to help. Send any questions our way if you ever have any doubt about the allowability of a cost. We're here to help you navigate those, and some of them are a little bit tricky, so even our team sometimes has to debrief to talk through certain situations to make sure we navigate the allowability of items. Okay, the next question is about the removal of asbestos flooring and replacing flooring. And the answer to that is yes, but again, it's one of those it depends items. If it's kitchen flooring specific to food service, then yes, absolutely, that's an allowable cost. If we are talking about the flooring in a cafeteria, that is a shared space or used by other programs, then we would expect that cost to be prorated and shared proportionately with the programs that benefit from replacing that flooring. So hopefully that helps answer that question. The next question, security cameras over the food service lines, and unfortunately this answer is no, that is not an allowable cost. The USDA expects food service funds to follow the uniform grant guidance, federal cost principles, which there are many of, but necessary, reasonable, applicable, allowable, and the USDA has already determined that security cameras are not necessary and constitute it's kind of like an infrastructure cost. So unfortunately, no, if we see security cameras expense to the food service fund, we do have to make that cost be restored to the nonprofit school food service account. And if we see any requests for prior approval for security cameras come through, we do have to unfortunately deny them. Okay, and the next question, how will we be able to access a recording of the webinar? Great question. We will work to what we call closed caption the webinar, and we hope to be able to post it on our website at some point in time. The closed captioning process takes a little while, and we also have to make sure that the presentation is ADA compliant in order to be posted to our website. So it might be something where it could be a little while before we're able to post it online. So feel free to reach out to us, and if we're able to send out a recording to you sooner than we can make it publicly posted, we'd be happy to do that. So don't be afraid to reach out to us on that. Okay, and the next question, digital signage to modernize our serving lines. Yes, absolutely. If it's digital signage specific and exclusive to food service, yes, that is an allowable cost to food service. Certainly a great way to reinvest in the program. Okay, and then okay, and I'm going to take a quick break to let some additional questions come in and formulate a response to one question that's waiting on an answer. So if you have anything else, feel free to send them our way, and I'll be right back with you in a couple minutes. Okay, I am back. So the next question we have is, how do we charge wages or let's say other purchases against the fund balance versus against the current year's year's expenses? So that's a great question, and essentially the long and short of it is your nonprofit school food service account or food service fund, as we call it, Fund 25 for public schools, is it has a running fund balance, right? So every day that's changing based on current sales, current expenditures. So we do determine your excess fund balance by your ending financials at the end of the school year. But that is always going to be ever changing once you get into the new school year. So it can be tricky for school districts who have an excess fund balance to get out of the cycle of having another excess fund balance, because we take your excess fund balance at the end of June 30th, 2019, let's say, and in the new school year 1920, you're continuing to make money, hopefully, and adding to that positive fund balance, which increases your current fund balance. It could be increasing your excess fund balance too, right? So you're going to expense costs in school year 1920. So basically you're suspending those excess funds in the next school year, the current school year. So once the previous school year is closed out, you're never going to go back and change the financials for that previously closed fiscal year. You will reflect them in the current school year. And ideally, the regulations requires spend those funds by June 30th, 2020 of this year. But keep in mind, you know, if you have a successful profitable program, you're going to be continuing to add to that potential excess fund balance if you don't find a way to reinvest more. So when you think about a spend down plan of action, not only do you have to fully exhaust the entire amount in excess, but we often recommend, it's a good practice to think beyond that, because of whatever you might be adding to that fund balance during the current school year operations. So I hope that answers your question. You would be expensing anything you purchase on your plan of action in the current school year 1920 right now. And the next question is there a standard formula to prorate shared costs? For example, replacing cafeteria flooring. So there is not a standard formula, because it's based on the individual usage at the building in question. So for instance, let's say if food service uses the cafeteria approximately 80% of the time, food service would not be allowed to pay for more than 80% of that cafeteria flooring. And we do recognize that, you know, cafeteria space is most likely majority used by food service use, right? But if anybody else benefits from the purchase of the flooring, the cafeteria tables and chairs, or whatever else is in that cafeteria, food service can only pay for their portion of the use. So I'm hoping that answers your question. I know, unfortunately, there isn't a standard formula, and it just depends on. I like to think of it as take your best educated guess with help of administrators in your district and in that building as to what the usage is in that space. And basically be able to defend that you know, that formula rationale, if you will, and then we expect food service to only pay that portion. Okay, so hopefully that answers that questions. I will put the line on mute again and see if any other questions come through. We'd be happy to answer them. And actually, while we wait for more, I'm going to put us back on our contact information so you can take a peek at that. You know, feel if we didn't fully answer your questions, or you have more at any point in time, feel free to contact us. Our team is happy to help in any way we can. And then we will stay tuned for in case any additional questions come through.
Good.
Okay, it looks like the questions have run dry for now, but that doesn't mean we can't entertain any questions, later. Feel free to call us, email us, whatever you have for us. And with that, we will conclude the webinar. We thank you so much for joining us today. We appreciate all you do to feed students in our great state of Michigan. We hope you have a great day, and stay safe out there with the winter weather coming our way. Okay, take care, everyone. Bye-bye.